Hi there, and welcome to our special feature, Know Your Options. Every 2 weeks on Thursday, we take a deep dive into the world of options trading, exploring the fundamentals of puts and calls and how you can effectively incorporate them as investing tools to maximize returns and manage risk. You can call us toll-free at 1-855-326-6266, or you can email us at knowyouroptions@bnnbloomberg.com. Our expert Chris Thom is standing by. He'll answer your queries in the middle portion of this show. That's about 10 minutes away. So get your questions in right now. Call us at 1-855-326-6266 or email us at knowyouroptions@bnnbloomberg.ca. In the meantime, let's bring in Chris Thom, Chief Executive Officer and Portfolio Manager at Moat Financial. He's joining us today from Vancouver, where he is based. Chris, great to have you, first of all. Hope you're doing well. And thanks for joining us once again on Know Your Options. Let's review, first of all, the basics of puts and calls and what they are. What is a call option? A call option, as we'll show you when we bring up this board, is an option that, Chris, why don't you explain what a call option is?
Yeah, so again, great to be here. Thanks. A call option is a contract between two investors that gives the holder or the buyer of that the right, but not the obligation, to buy a set number of shares for a set price by a set date. And so people who are buying these are often bullish, and we're often on the other side of that trade, selling them to generate income.
Okay, and a put option. We'll put a board up here as well, a contract that entitles the owner to sell a specific security, usually a stock, selling that security by a set date established in the put contract and at a set price by the writer of that put. Now, Chris wants to talk to us about some specific topics in the world of option. First of all, Chris, how can people use options in their investing accounts?
Yeah, so I like to say options can do almost anything, right? I mean, there's usually just a cost with that. Sometimes that cost is money that you're outlaying or you're paying premium. And other times it's adding some risk or selling away some upside or making a commitment to buy stocks at a lower price. So, some people are out there doing some reasonably wild stuff with them. Most people, us included, are using them to generate income. It's a really great tool for income-oriented investors to add more diversification and ways to generate money in their portfolios.
So as our board showed us, you can buy an ETF. That's one way of using options. You can also open an options account. Talk to us about what options accounts are, Chris.
Yeah, so with options, there's different levels of permissions when you set these up. So you're not just opening a regular cash account or a regular RRSP. You do have to go sort of that next level to have an option approved account. So with these different levels, the first one is level 1. So that allows you to buy or get long puts or calls. So that's the only thing that you're allowed to do. You're not allowed to do anything exotic, which is fine, but that's the lowest level. The next one will be level 2, and that gives you everything from level 1, where you're buying puts or calls, but it allows you to add covered. So covered options in this context is typically just covered calls. So what does that mean? We've talked about this a number of times. It means you own stocks and then you sell somebody the right to buy those shares from you at a higher price, and they pay you a premium. That's your income generation. So it's worth noting that level 2 is the highest level that you can be approved or can be approved for registered accounts. So if you want to be implementing some option strategies in a TFSA or an RRSP or a RIF or any other registered account, level 2 is where your permissions get capped.
Okay. Now, a lot of people perceive options as being risky. They perceive them as in fact, magnifying risk in their investment accounts and portfolios. What can you tell us about the question of whether options are risky or not?
Yeah, I mean, that's I'd say a misconception. It's options are a little bit different. They haven't been around as long as stocks, but you can definitely take big risk, add huge leverage, and do some, like I said, I use the term wild and crazy already here. But you can also do some very low risk or completely remove risk. So, you know, if someone says, hey, I think stocks are risky, well, stocks have a broad range of risk. Like a big spectrum. So, you know, you could buy a 100-year-old utility stock that has regulated revenues. That would be probably on the lower risk side of the equity scale versus, you know, some really high risk micro cap startup companies where you could lose all your money. So it's really important to realize that you can't just wave one stick over options and say whether or not they're risky or not. It's really just a matter of understanding what the strategies are and implementing them as makes sense for you and your portfolio.
Okay, that's Chris Thom on a number of options-related topics, how you can use them in accounts, the different levels of approvals that may be necessary or are necessary depending on how extensive your use of options are, and some great insight into the risk level of options. Chris Thom is CEO and Portfolio Manager at Moat Financial. Right after this, he will take your questions. So call us toll-free at 1-855-326-6266 or send us an email at knowyouroptions@bnnbloomberg.ca.